Hello traders, Gary Wagner here. Approximately noon in Honolulu, 6 o'clock in New York City. It is Thursday, last day of the month, May 31st, and this is the daily report for gold and silver. We are currently just opening up in the afternoon session for the cash market in the precious metals, down about $2.30 this morning, up about 70 cents currently. Current print on the screen, as you can see, is 1560, 1561 in that area. We also are charting the euro gold spread, which you can see in the upper left hand of the screen, 1262. In terms of any kind of a range today, 1551 low in gold, 1574 high. With our silver, we have 2747 low, 2834. You know, traders, last week, actually last couple of weeks, we've been really focusing strongly on the strength of the U.S. dollar, the dollar index. Last couple of days, though, I have kind of shifted that focus to look at the underlying causes of the strength of the dollar, which really is the weakness in the Eurozone and their currency, the euro dollar. Looking at a weekly chart of euro dollars, simply spread against the U.S. dollar. Heikin Ashi format, will convert it to a candlestick because what you do not see in the Heikin Ashi format is the fact that we are trading on the lows. You can see it by this black bar here. But what I find very interesting right now, and where I think this market could be headed, because as we continue to see this saga unfold, what we're witnessing is really news that is showing us a disunity, really, in the Eurozone, rather than any kind of a complex system to resolve those issues. So I'm going to put up a couple of different areas that, on a technical basis, they could provide support, but they're critical areas because if they break through those areas, it suggests going to the next target area. And by looking at where the euro goes, it's going to give us an indication of where the dollar is going to go. And the one thing that we noticed in terms of a major paradigm shift over the last, say, 6 to 8 months in trading is that safe haven always meant gold. Years ago, that's what I looked at as a safe haven investment. We assumed that as the euro crisis accelerated, that money would flood into gold, which it did last year. But we saw a paradigm shift because we're getting that money going into U.S.-backed investments, treasuries. The interest rate's very low, but it is a safe haven investment. If you're a euro bank, where do you want to keep your assets? Well, probably not in euro-denominated formats. So you're probably heavily weighted in U.S. dollar formats. Now, that being said, we can see quite easily these bottoms here have kind of moved, and I always want to get it as straight as possible. But you can see that we have kind of broken through this area. We've got some lows down here, so it's absolutely not something etched in stone yet. But if it does begin to barrel through that, we're sitting at 123.63. I think it has an opportunity in the short term to really go to 120 or below. As I said, my personal take is that at some point we will reach parity between the euro dollar and the US dollar. So what does that really mean? Well, when we look at the market itself, this to me is a very, very realistic target if the euro continues to fall. And that's really that 120 area. There is real good technical history right in this area, as you can see, based upon a couple of different lows that found support. As you can see, as this market came down, this was an area that had found support as it moved back up. Second area, well, as we've said, we're right here. And if we break through this particular support level, my personal sentiment is we're going to head and test that 1.20. So what does that mean for us? Well, I talked briefly yesterday about an alternative strategy for those who are able to, off of the Forex, simply trade the euro gold spread as opposed to the US dollar gold spread. And as I said, that to me holds a lot more promise right now in terms of potential results and potential rewards, because there can be no doubt that when we consider the kind of range we had from the record top in the market to the retracement point that we have had, as I talked about yesterday, you've got $400 here, 150 euro dollars here. The euro, because of its weakness, has allowed gold to retrace less on the downside and to gain more on the upside. So it's definitely something that if you're able to partake in it in that way, I recommend it. The other thing is that for traders that are working with the futures markets, you can simply look to put a 3-to-2 hedge on. In other words, whether you're trading mini currencies of 10,000 and mini golds of 10 ounces, or the standard contract 100-ounce gold, 100,000 ounce of the currency, what you want to do is have 3 currency contracts, short the euro to every 2 golds that you're long. So if you're trading the minis in gold, in essence, what you're going to be doing is purchase 20 ounces of gold on the long side, sell $30,000 or 3 contracts in the mini currencies of the euro dollar. And in that way, you will net the same effect as being able to trade the euro gold spread, because in essence, that's what you're doing by combining that kind of a pairing. Now, the jobs report is going to be coming out tomorrow. Market's been quiet, currently trading, as you can see, 1559.95, call it 1560 in that area. And the jobs report is something that we want to pay particularly close attention to, because other than the FOMC meeting and the minutes that they'll release, which is not scheduled to next month till June, which starts tomorrow, this is the most important economic data that will be released this month. So what does that mean for us? Well, we know that we have, in many number of ways, weekly chart June gold, but we know for a fact that we've absolutely broken through that long-term support. And the gold bulls, we have it out for us in that we really need to gain control, which we have lost. The bears have had control of the market. You can see that there were really, I look at it as a series of a couple of tops, but the first testing, 1920 to 1520, that's right in here. And then our secondary, when it breaks through, that critical area right in here. Now, that being said, in terms of breaking through this long-term substantial, starts in 2008, this long-term upper support line, as you can see, we've broken through that. So the question that's going to remain is going to be whether or not this current target level holds, which is at 1520 area in cash, as I said, about 1530 in the futures market, if this area is going to hold or not. Now, this is a weekly chart, but my sentiment is if it holds, we're going to see it begin to move up. If it cannot hold this area, traders, I fear personally that the only place it can go to test is this 38% Fibonacci retracement level, which sits at around 1463. That, to me, is really the only likely area, or just below 1500. And of course, that area is simply based upon this series of lows that found support last time the market came down and tested this area. But last time it did, it was prior to reaching the record top. So this area right now is absolutely critical, because there can be no doubt once we broke through this critical support line, traders, it became a different ball game. When we take a look at silver, a similar scenario happening in that what we're looking at is a series of lows, but unlike gold, what we have noticed in this marketplace is we've had a succession of higher lows. That is indicative of a market that is moving up. Look at it this way. When this market came down, the best way to describe it, when you take a look at the lows here, the next set of lows are lower, lower. You get a series of lower lows. You get a series of lower highs. And that, in a nutshell, is the mathematical expression of a market in a downtrend. A market in an uptrend is exactly the opposite. You get a series of higher lows and a series of higher highs. Now, we've met part of that criteria. We've gotten these higher lows, but when we look at this high, market comes down, it goes to a double top. So we really get a matching top in here. Market meanders for a bit, and here's the interesting part. This low, of course, is higher than this low. So the question's going to remain, because we didn't go straight into an uptrend. We're right now very, very much in a sideways market. Will this market make a higher high? Because if it doesn't, traders, that's indicative of either congestion or a market that's going to continue in a downtrend. Real important information that we will use to guide us in our upcoming and current trades. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up. Bye-bye.